Hello and welcome to the Solutions Scoop. I'm Ravi Venkataraman.
And I'm Amanda Tepper. Ravi and I are co-founders of the Chestnut Solutions Institute, an independent forum dedicated to advancing the future of the investment solutions industry. Here at The Scoop, we examine the latest solutions marketplace developments and speak directly with solutions industry leaders. Our guests span the investment ecosystem, from OCIOs to asset owners, investment consultants, asset managers, and other key industry stakeholders.
These conversations are an important part of the Institute's mission to improve transparency and help establish standards and best practices across the solutions industry by educating asset owners, providers, and all other industry stakeholders. Let's get to today's scoop.
Good morning, everyone. My name is Michelle Brown, Executive Director of the Chestnut Solutions Institute, and I'm very pleased to welcome you to this public education event and conversation, which provides asset owners a toolkit and a guide that will be extremely helpful as they evaluate OCIOs and investment solutions providers. For those of you who are not yet familiar with Chestnut and our Solutions Institute, I'll take a few moments to give you a little background. Chestnut Advisory Group is a boutique management consulting firm that provides strategic growth advice exclusively to asset managers and investment solutions providers. We offer a range of practice areas, all focused on helping asset managers grow their business strategically. That's product and solutions, distribution strategy, M&A strategy, go-to-market strategy. We have the ability to help and direct the implementation of the advice that we give. And finally, our work on OCIO and solutions led us to start the Chestnut Solutions Institute. And I'll take a moment to emphasize here that many of our articles and thought leadership on the solutions industry can be found on our website. We founded the Institute to educate the marketplace about OCIO and investment solutions, which is one of the fastest growing segments in financial services today, but to date, not very transparent. The agenda we will discuss includes a robust conversation about marketplace trends, and we'll walk through some of the research we've conducted on defining what are investment solutions, why are asset owners looking for solutions, what are the needs of the market, which is certainly not well understood given how fast it's growing, the role the Institute plays in the marketplace, and also some of those tools we're going to leave you with and how you're going to benefit from using them. So the team in front of you is the best group to have this conversation. Our Institute co-founders, Amanda Tepper and Ravi Venkataraman. Amanda's background is in research and thought leadership at firms like JP Morgan and Bank of America. And Ravi founded Mercer's OCIO business, which is now the largest OCIO in the world. And he ran the solutions business at MFS. My background is in both institutional brokerage and in institutional asset management. And with that, I'll leave this conversation in the very good hands of Amanda and Ravi.
Thanks, Michelle, and thanks to everybody who's joining us today. It's been about 18 months since we publicly launched the Solutions Institute, but Ravi, it feels more or less like yesterday. Time flies when you have fun. We saw a big problem in the marketplace that we're addressing here at the Institute, and it's really been going on for years. There's a lack of awareness, a lack of standardized definitions across the industry. As Michelle said, we found ourselves doing more and more strategy consulting with both asset managers and OCIOs, helping each of them to determine how to adapt to investors' increasing demand for holistic solutions to help them better achieve their goals. So the good news is that the industry responded with a big set of creative, innovative, flexible investment solutions, everything from custom products to OCIO, and we're going to get into that in a minute. But the bad news is that the industry is not well defined, not well understood. There's no widely accepted standards and norms, and that's what creates investor trust and would allow the segment to do even better meeting investor needs. So the Institute aims to help all solutions industry participants better navigate this valuable and growing solutions marketplace. And that's what we're doing today with this discussion. Here at Chestnut, we do not conduct OCIO search. The Institute is a neutral forum. We're aiming to improve the industry for everyone.
Yeah, and we are super grateful in our first year to our founding members, many of whom are market leaders in the OCIO space and the solution space. But I wanted to point out that the Institute and the work and understanding OCIO and solutions is not just the domain of OCIO providers. Everybody in the ecosystem of investments, especially institutional investments, asset managers, component providers, buyers, search consultants, all are important parts of the ecosystem. And we really hope to be able to communicate this information, our research, to the market at large. So Amanda, you talked about confusion, lack of clarity. Let's get to the question of what is a solution? What's an OCIO? What's the difference?
Yeah, it's pretty basic. And we get that question literally almost every day. So we got a long way to go with market education. So here's how the Solutions Institute defines an investment solution. It is anything beyond a portfolio building block. And we define traditional investment portfolio building blocks, which are standardized products, served everybody really well for more or less the last century. And as we're going to get into in more detail, all of today's current evaluation tools have been built for this purpose. So they're built to evaluate standardized single asset class products. So think of active US equities indexed to the S&P 500, right? That's not an investment solution. So just keep that in mind because we're going to be coming back to that a little later. So we call an investment solution anything and everything that is not standardized. So the first step would be a single asset class product that adds a special screen or enhanced risk return or a more concentrated portfolio, something special for one particular investor or perhaps a subgroup of investors. That's where it starts. Often it could also be custom reporting or other custom analytics. The next step would be a little more customized. So multi-asset class products, but they're standardized, but they're meant for a specific subset of investors. Target date funds are a great example of a solution because any one target date fund is only meant for employees at that firm who are planning to or aiming to retire in that particular year. And then the ultimate expression of an investment solution would be full discretion, full portfolio, OCIO. So it's a range.
I think it's important for people that are listening in, they're probably realizing that, so even though I'm a component provider in a traditional asset class, I am as well part of this ecosystem and this continuum of solutions. And certainly, I think over the last 20 to 30 years, the direction of travel is from left to right. So there's an important role for all kinds of providers here because they are increasingly providing customized solutions to clients. But with that in mind, could you talk a bit about non-OCIO providers and what are services they're providing that could be called solutions?
Yeah, with our definition, Ravi, that's a great question. What we're seeing is actually most asset managers are already providing investment solutions. They just don't call it that internally. They're not thinking about it. They may not even be organized that way internally. But this is from our research among non-OCIO provider asset managers. We had over 100 respondents, and more than 3/4 of all of these firms' clients, and these are asset owners across institutional and retail and private wealth, more than 3/4 of all of their clients are using at least one investment solutions product offered by these firms. So it's actually an enormous business. And in the interest of time, we're not going to go through all the details here, but we would call a solution would be anything from a model portfolio to proprietary customized funds for managing portfolio risk management technology access that asset managers are doing for their clients, offering trading capabilities, custody. It's a wide range.
Now let's turn to what folks think of as OCIO only. Could you explain some of the dynamics in the OCIO specific market?
The headline is it's growing really rapidly. And I've been saying that for 8 or 9 years now. We don't see that changing. Current growth rate about 9% all in. The organic growth is much higher than that. Overall, we'd call it mid-teens plus. But as the market gets bigger, the capital market returns, of course, have an impact here. So today, with this discussion, we are publicly announcing for the first time Chestnut's 5-year forecast for the OCIO marketplace, our new one, which is updated. And as you can see, we're now putting the total global OCIO marketplace at $4.7 trillion in 2029. Most of the market and most of the growth is in the US, but international is also growing apace, and we're forecasting both markets to grow. And this is across all segments, which we can dive into.
So our forecasted growth begs the question, why is it growing? What are the reasons behind this growth and this adoption in the client community of the OCIO capability?
Yeah, so let's look at the different types of investors, because ultimately that's the issue. Let's look at all the investor segments they're all growing. There is no group of investors out there that are not growing their usage of OCIOs. The fastest growing is endowments and foundations. The slowest growth is government DB plans. And there's various reasons behind that, but they're all growing. And it's worth noting that public wealth and private wealth, and RIAs are each adopting OCIOs in a 25% plus expected growth over the next couple years. So across the board, investors are using it, but there are different reasons. Some of them are common to all investors, and some of them are not. Why don't we turn to that now? There are different needs, like I said. There are 4 big issues that they all have in common, which is looking for greater investment expertise, greater help with their governance, hoping to lever the scale of solutions providers, and looking for better understanding and trust among the asset owner themselves. This is usually at the board level, also among the team. And then often there's education even for other stakeholders of the asset owner. But there's different needs among different investors. So let me just give a couple of quick examples. On the E&F side, endowments and foundations, generally speaking, these asset owners prefer to focus their limited resources on their core charitable mandate, and they lack scale. So they need specific help across these 4 factors. In corporate DB plans, defined benefit plans, are generally now moving to LDI. They're immunizing, they're winding down these funds so that they can make sure they meet their obligations and eliminate any need to add cash or run through their earnings of the parent entity. And again, that's not their core expertise. So they're looking for deeper resources and help with that. And then on the private wealth and RIA side, in both of those markets, many of the end investors want primarily to preserve their wealth. They're facing complex tax issues. They want to focus on a lot of other things besides maximizing returns. And then the intermediaries, as Ravi talked about, the ecosystem. In-house wealth advisors and independent RIAs at larger firms are both seeing the benefits to both their end clients and also to their own businesses of turning to centralized expertise for portfolio construction and ongoing management. That frees these advisors to focus on addressing many other pressing client needs like tax issues and philanthropy, and then, of course, also to build their book of business.
So you just talked about the need and the buying side. Let's now turn our attention to the provider side. So we asked the investment community, what are the top core competencies as a provider that you believe are important? How do you put your best foot forward? The top categories, self-rated, arguably, personalization, high touch, perform as an extension of your investment stuff, seamless decision making. And then something that's grown tremendously over the last few years, market segment expertise. And I would note that this is not unique to the OCIO provider world. This is also increasingly true of asset managers that are providing a la carte product offering. It's definitely an evolution in our business that it's a tougher proposition to be a generalist if you really want to develop deep relationships with clients that are looking to streamline their relationships. So more and more players have been developing a pretty deep bench of expertise in actually knowing the issues germane to endowments, foundations, pensions, like you were just mentioning, to have some of those capabilities to help solve those fairly technical issues and problems that are unique to that particular market segment. So that continues to be the direction of travel broadly, and certainly the case in the OCIO world.
Yeah, I'd like to just give an example there of why that deep technical expertise is so valuable and increasingly valuable for all different types of investors, right? So if you go back to what we were talking about a moment ago, the building blocks approach, which worked for most of the last century, for most of that time, asset owners' primary asset allocation decision centered around the mix of two asset classes, right? It was stocks and bonds. The quarterly board meeting cadence, the structure of having an all-volunteer board really worked well in that environment. But today, Chestnut I count at least 20 different public and private asset classes that are available to most asset owners. Plus, they've got the ability to customize every single one of those products. They can overlay derivatives. They can borrow and lever it. So then you add on top of that a wide range of unique investor needs, like we were talking about a minute ago, de-risking a DB plan versus meeting the multi-generational after-tax needs of a private family. And you can see why all these factors on this slide and elsewhere come into play. So clients also need to start to understand the providers, don't they? Because providers also have a wide range of things they're good at, and it's a lot more than just alpha, right?
Yeah, that's right. And so we asked providers, why do you think you're actually getting hired? And maybe we could take a look at a couple of those responses. And some of you may be surprised that investment performance, that we typically say, oh, obviously it's investment performance. It's not necessarily at the top of the list. Is it important? Absolutely, super important. But flows from the previous discussion we were just having, the experience with the market segment, knowing the client's issues, the previous relationship with the client far and away leads the list. And the two are related, right? The clients, you presumably know their market segment, and you're bringing specific and specialized investment expertise, like you were just saying, Amanda, which is increasingly pretty diverse with new instruments and new markets, private public investment vehicles, vehicle innovation in general. And all these other services, such as governance, are further down the list and important and may not have even made a list like this 10 years ago.
Yeah, I'm seeing there's a lot of lists that we have here, right? Those are a lot of factors for asset owners to digest. So what can they do to better understand and navigate this landscape to find the right solution, the right provider, et cetera?
Yeah, great. So we're going to turn to a few things that might be helpful to you if you're an asset owner, if you're an intermediary, frankly, even if you're a provider looking to put your best foot forward. So one of the things that Michelle mentioned at the outset, we're going to make available to the asset owner community, and our members have access to this, is the research we've done. Amanda and I have shared some of that here already, but we've got a research report that we released earlier this year that touches on the things we've talked about, defining solutions, the growth rates, who's buying these services. But we also get into what does the selection process look like? If you're a consumer of these services, how should you think about due diligence? What questions should you ask? How do you think about evaluating the capabilities that you might be looking for?
If we focus back on the OCIO piece of the investment solutions marketplace, which is the most widely known today and best defined, even though I get questions every day, what's an OCIO? Because we've identified more than 125 providers just in North America. So how can investors start to think about them, to start thinking about who would be the best even type of provider for them, much less the specific provider?
Yeah, much the continuum you presented earlier about the what's a solution, the various steps along the way, all the way to OCIO. This is another point of clarity that the Institute has put a stake in the ground, because it is helpful for buyers and providers to think about, okay, who am I? What is at the heart of what I do? Or in the case of the buyer, what am I really looking for? And how do I think about inviting those providers to present their capabilities? We've introduced this framework. We've got 6 different provider types, OCIO specialists all the way to financial advisor. Now, you may look at this and go, actually, we probably occupy 2 or 3 of these boxes. I'm a bank, I'm an asset manager, and providing OCIO services. Thinking about it in terms of the distinguishing features of the core competencies is helpful, especially when you juxtapose as a buyer your needs. So I'll give you an example. If you're a pension fund that's looking towards an end game, you've made the decision to wind up the DB plan and you want to pay it out, take it off your books, as it were. That may lead you to a type of provider that can help you not only today manage the money, but see you seamlessly through towards an end game and perhaps an insurance solution at the far end of it. We're not being prescriptive here. We're not saying that's the way it needs to be. I'm just giving you an example of the issues and the provider types that you may think about aligning with that fit your particular situation.
Yes, as you said, Ravi, most providers are actually in more than one of our categories. Certainly the largest ones are. One of the things I love most about the investment industry is how unique every single investment management firm is. That makes it fun to work with them, but it also makes it really tough for an asset owner to navigate. How can we at the Institute help asset owners find the right solutions provider for them?
So we think this is a helpful framework. If you think about what an OCIO provider or solutions provider brings to the table for a client, we touched on the driving needs and core competencies, et cetera. We are putting forth this framework that thinks about it in 3 different dimensions, certainly with investment capabilities as at the core, right? So that's fairly straightforward to understand. It always has been the case, but we would say that the definition of investment capabilities has certainly broadened, like we were just saying. It's solving client needs and problems, portfolio construction, all the way then to implementation and alpha through security selection, in addition to traditional assets, private assets, et cetera. So that's at the core. But there are 2 other very important dimensions, and those dimensions are operations and service value add, especially in the context of a partner that is providing more than just one a la carte standardized investment capability. So things that fall into the operations domain are things like rebalancing, trading, custody, vehicle innovation, technology, management. It's the stuff that makes the wheels go smoothly together.
Or not.
Or not, yeah. And to the point of or not, the front line is the service, right? Service value add. That is the face to the client. So whether you're a provider or a buyer, we think this framework can help you think about what you're providing and how you're articulating your value add in each of these dimensions. And if you're a buyer, it may help you think about, okay, what is it really that I'm buying? What is more important? What is less important? And I think frankly, it will help the investment industry at large take a little bit more of let's step back and take a longer time horizon. Let's broaden the definition and success measures, because we're here to meet our objectives, not just outperform a relative benchmark over the next 3 months or 6 months. So we think it'll help with the problem of short-termism that we have in this industry. And we also think it will put performance and fees are certainly important as an evaluation criteria, but I think all of us were probably a little guilty of focusing a little too much of that, and especially over the shorter term. So we think this can help.
2D versus 3D. And just to share with all of you that we are at the Institute working right now in conjunction with a number of our members on building out a rubric in an open source way, showing many more elements that investment managers are providing their clients, and starting to talk about ways these can be measured and evaluated over time. It's a more holistic way to measure value. And watch the space, you'll be hearing more about that. But Ravi, you're leading this charge for us. So can you dive into it a little bit here?
Yeah, holistic value measurement is what we're calling this topic that Amanda just referred to. So why is it needed? And we would propose that it's needed for the betterment of the investment ecosystem and to achieve client outcomes from both the asset owner perspective and the provider perspective. From an asset owner perspective, I touched on this, to improve governance. For investment committees that come and go, that may not necessarily be investment experts, to really be on the same page. What did we buy? What are we looking for? And are we on track? To bring a little bit more of a systematic approach to provider evaluation, rather than we are all human beings and oftentimes fall victim to the last data point. And we all know if the last data point was weak performance, it casts a cloud over all the good work and the value that's been delivered, and can sometimes help you take your eye off the bar. We think the buyer community, the client community, if they adopt this sort of a framework that we're working on, which should be ready early part of next year, is really to have more of a partnership approach with providers, which we think greatly increases the chance of really successful outcome in meeting client needs. On the provider side, equally important to be forthcoming and articulate the value add, to communicate all the great capabilities that an organization may have and may be delivering, or if they're not delivering it, think about what they could deliver that could help the client achieve their outcome. So that would include investment alpha, but also the value of non-investment alpha. You can call it relationship alpha, service alpha. And I think the last point is the same I would reiterate for the provider side, is really this partnership approach to solutions and OCIO relationships. If they're going to operate as part of an extension of your staff, you want governance not to be a friction point, but also really be additive to the program.
Just sticking with OCIO for a minute, we would recommend that any asset owner looking to hire an OCIO go into it thinking of this as ideally a decade-long, and it's a real failure if it's shorter than that. And the shorter the relationship, turnover is just deadly when you're talking about the entire portfolio. Transitions are tough. If you think about it that way, that's a very different framework from which to evaluate and decide. And you want to set it up so that you can continually evaluate, because likely the team of decision makers at the asset owner on day one of the relationship with the OCIO will be 75 to 100% different by year 10. But you'd want to be evaluating the OCIO the entire time. And of course, over that period of time, probably the asset owner's needs are going to change as well. And the capabilities of the provider will evolve. So this is something that should be continually revisited. And it's something that we'll be working on probably forever at the Institute. So we're excited to get the first one out in the beginning of next year, as we discussed. But it's not the only thing we're doing at the Institute, right? We're not going to go through this list, but let's just say in 18 months, we've had a real market impact. And this is the first of many events and efforts we'll be doing now with asset owners directly. But in terms of what's coming immediately, we've got our member forum next month in New York. We are going to have our next public webinar, which will be focused on pension solutions, and we'll have a few of our members speaking. In January, we'll do our annual Shape of Solutions in 2025, sharing the view of CIOs of solutions providers. And then that holistic value measurement research paper will be published. We'll have a new evaluation tool available at that point for asset owners and institute members, and we'll be doing other webinars.
Yeah, great conversation, Ravi and Amanda. You really underscored a key aspect of the Institute's mission, which is to educate the marketplace. So thank you. And thank you to all who tuned in today. And with that, enjoy the rest of your day. Don't hesitate to reach out to any one of us with questions or follow-up.
Chestnut Advisory Group is a boutique, practitioner-led management consulting firm dedicated to asset managers and investment solutions providers. In addition to the Chestnut Solutions Institute, our advisory practice areas include distribution strategy, M&A support, go-to-market, and implementation and coaching services. This podcast is owned and produced by the Chestnut Solutions Institute. If you like this content and would like to access more insights, webinars, and podcasts, please check out our website, chestnutadvisory.com.